On All About Stocks this week, the markets cheer a new government at the centre. We'll tell you what your strategy should be with your stocks. PSU stocks in focus as they rebound after those election results. Will give you the best bets in the space. And our financial advisors Paras and Gaurang give you the top stock bets for the long term. Welcome to All About Stocks. This is a show specifically meant for long-term equity investors. It's an exciting time to be in the markets right now. A new government at the centre, expectations of an economic turnaround are running high. Now the markets have been rallying, expecting a lot of change. And over the next half hour, we will work out an entire strategy for you for your portfolios. If the stocks have run up, should you be booking your profits? And if the stocks are falling right now, should you be buying more? We'll tell you everything in the next half an hour. We'll also answer some of the questions that you sent in during the week. Remember, my email ID is at the bottom of your screen. Send in any question you have and you can reach me on Twitter as well. Let me first bring in my colleague Ajay to give us an update on how the markets played out this week. Ajay, take us through the stocks and of course, tell us also about that power sector that has rebounded over the last 2 weeks.
Well, Faye, it was a week of both extremes as far as markets are concerned. At the start of the week, we actually fell almost to 7250 on the Nifty, and it was turning out to be a very terrible kind of a week for Indian equities. But by the end of the week, we started witnessing some strength coming back and finally ended the day and did the week above the 7350 mark, gaining around 2.5% on the benchmark indices. But the bigger story was in the mid-cap and the small-cap end of the market, where the indices gained around 10 to 12% each, the mid-cap and the small-cap, and individual stocks ran up anywhere between 10 to 20% and 40 to 50% on the higher side. So it was a week of bargain hunting in the broader markets, and hence the entire focus of the market was in the broader market. As far as global cues are concerned, they were mixed because of the Fed meet minutes and did provide little support to the Indian equities. But the fund flows also was slightly on the mixed side. In fact, we saw DIs turning buyers on several days. That is something to talk about. Also, market is now trying to find direction by the shape of the possible cabinet which will be in place in over the next week, and what ministries will be taken over by which individuals, what is their stance on various kind of reforms. That is what market is talking about for further direction, and also what stocks and sectors to play in that regard. If you talk of one theme which really played out in market this time this week was the possible reform in the coal area. In fact, a large company like Coal India gained about 15% this particular week on hopes that perhaps the Prime Minister would take Coal India and the coal ministry under its direct leadership, and may even consider inviting foreign participation, may consider breaking up the big Coal India as a company into several 4 or 5 companies, and may invite private participation in it in order to ensure that the volumes as far as production from Coal India is concerned improves, the supplies are adequate, and evacuation of coal and proper supplies to the power plants comes into place. Several companies are seen gaining from here on if this reform process in the coal sector actually starts. Most of them are power companies, but names like foreign participation also is expected. So Coal India continues to remain one stock which is being sought after by foreign institutional investors along with the domestic investors and individual investors, on hopes that there will be a massive reform push in the coal sector, and related power companies will also continue to remain in focus in this light.
All right, Ajay, thank you for joining us with that update. In the studio today, Gaurang Shah, Vice President at GeoJ BNP Paribas, and joining us on the OB link is Paras Edinwala, Managing Director and Principal Portfolio Manager of Capital Portfolio Advisors. Gentlemen, thank you so much for joining us. Big change since the last time we spoke.
Yes.
Now, if I'm looking at my portfolio, Gaurang, obviously I'm going to think good days are back. What should I do at this point? I want to understand from you. There have been massive statements being made. People are saying 9,000 on the Nifty in the next 2 years. Somebody else said, if the market doubles in the next 5 years, I'll consider it a poor performance. Do you share that kind of optimism? Or do you think we should be a little cautious at this point?
Well, Fair, honestly, I think, first of all, what I could make out from this general election is that common sense has prevailed upon all of us who have gone and voted. And we have bought a stable government in the center. Now it remains to be seen how does this government performs. Next week is going to be full of events. So I would say that you need to identify your portfolio into good and bad, whichever stocks have not performed over the last 1 year, 6 months or maybe more, and if they've started to run up maybe 10, 15, 20% over the last week, it is possibly time to have a relook at it, churn and exit those stocks concentrate on large cap and mid cap sectorial themes which are going to be followed, of course, and then take it forward from here. Jumping onto the bandwagon and buying anything and everything in the small cap or mid cap fare would turn out to be suicidal. So I would say good times are here to stay. Time will tell, and I hope that we go right this time.
All right, I want to bring in Paras here. Paras, a lot of sectors have also turned around. Sectors that, as investors, we were struggling with over the last 1 year. We've seen infrastructure, real estate is showing a lot of interest right now, power sector, and of course, all of those PSU stocks. When you look at that entire group of stocks that investors are showing interest in right now, can you pick out where you see value?
Yeah, I think right now there is clearly a huge amount of buying that is happening in sectors that were shunned so far, largely because of that their poor profitability arising out of policy issues. And now suddenly there is a great amount of hope that those are the very sectors which will really see some support coming in from the government. And therefore there is a huge amount of buying. So right now, yes, all the policy sensitive businesses are coming back into the vogue, whether rightly or wrongly, and those which did not need any support from the government, relatively, they are being shunned by the by the investors. So I think there is clearly a portfolio churn happening, and you will see this churn kind of accelerating if the moves by the government are in line with what people expect.
All right, I want to ask you this now. Obviously, when cycles turn, we saw IT and Pharma take a bit of a beating. There is a stronger rupee as well that we need to consider. But there have been opportunities within those IT stocks. If you looked at TCS on Monday, that corrected so sharply. Was that an opportunity for us to pick up TCS at this point? Or do you think there will be bigger opportunities in the future?
So, the point that you mentioned that Pharma and IT have corrected, well, that's purely because high risk appetite has come back, and you've seen single digit, double digit stock give you a return of 15, 20, 30% over a week time or maybe about 3-4 days trading session. We are still positive as a brokerage house on Pharma as well as an IT. And we do believe that maybe rupee-dollar equation is a short-term or a medium-term hangover, but earnings is something. So
you don't buy the theory that the rupee is going to continue to strengthen over the next 1 year?
I don't think that you will see that kind of strength that we've seen from 68, 69 to sub-60 levels in the recent times. I don't think that kind of big. All those triggers which enabled rupee to strengthen has been in place now. You require miracles to see levels of 55 and 50, honestly speaking.
Paras, tell me what your call is on SBI, especially for those of our viewers who've been holding it for the last couple of years. And also tell us what you expect from the other PSU banks.
I think the prima facie reading of State Bank of India results is positive. The manner in which they have grown their non-interest income, the manner in which they have reduced their NPAs or even gross non-performing assets. I think that's quite commendable, and they are not the only ones. We are seeing that happening in several other banks as well. While the less efficient ones have shown some kind of an increase, but the more progressive ones like SBI are clearly attacking the issue of NPA lock, stock and barrel. And with a turnaround in the economy, my sense is, these are the banks which are really going to benefit. If the economy really turns around as is generally expected, the delta in profits in PSU banks will be significantly higher than those in the private sector banks. And therefore, we are seeing this tremendous amount of interest returning back in the PSU banks.
Well, would you recommend at this point any of our viewers pick up PSU banks for the long term? And if so, which ones?
Yeah, I think definitely one should really look at some of the PSU banks. State Bank is clearly at the top, followed by Bank of Baroda, Canara Bank, Punjab National Bank, Syndicate Bank, Indian Bank. These are some of the banks that one would definitely want to look at. And even the smaller ones, I'm sure people will really get into them as well because the valuations are so screamingly cheap. So I think I wouldn't be surprised over the next 1 year to 15 months, PSU banks really outperform the private sector banks.
All right, let's take a few questions. Neeraj has written in 860 shares of Coal India at 374 rupees. Should I hold on to this share? Now, Coal India ended the week at 397, nearly 398 in fact. What's your call on Coal India? We've been waiting a long time for this stock to recover. Should we sell it now and take the money off the table?
given the kind of optimism in terms of power supply fuel linkages and Coal India being the largest player in the world with the reserves that kind of it has, my understanding is that it's going to take a while for the power sector reforms, for getting approvals, for getting clearances, for tying up the linkages, fuel linkages, etc. At maybe 400 or above 400, if your view is maybe a medium-term view, short to medium-term, then I think it is time to take money off the table. Not to forget, performance-wise also there were issues. There were certain legal issues also involved in this particular company. And one of the largest stakeholder had actually gone and filed a case, if I'm not mistaken. So keeping all this thing in mind and the kind of policy reforms that we'll see over a period of time, at least short to medium term, maybe 420, you should take money off the table.
CN Shaligram has written in, he has 200 shares of NTPC, which he bought at 122 rupees. He wants to know if he should hold on to that stock. NTPC ended the week at 160. Paras, what would you like us to do with NTPC right now? And also give us a quick view on the rest of the power sector. Since there's so much talk about reform in that sector, where do you see those stocks going?
I think NTPC has been cheap in the past and continues to be cheap, considering the fact that you need a huge amount of capital outlay to really replicate the same kind of capacities that NTPC has laid out. The only reason why it hasn't been performing is because of the manner in which the company is really going about doing things, and because of the ownership. But if the problems in the power sector are kind of addressed, I think not only NTPC but across the spectrum, the core power generation companies, the utilities, I mean, the distribution companies, the transformer companies, everything is going to be really benefited. And we're not surprised at the manner in which several of the ancillary companies in the power sector have really performed, especially in the last 1 to 1.5 months. So that move, or that interest will only accelerate if the government, indicates its commitment to reforms in the power sector.
All right, we're going to take a very quick break, but on the other side, both of our guests will give you their top stock bets for the long term. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Both of our guests, Gaurang Shah and Paras Edenwala, are still with us, helping us figure out a long-term strategy for our portfolios. Now, we asked both of them to bring in one stock that they think makes sense for us to buy at the current levels. Paras, of course, has recommended Info Edge. Now, it's currently, it ended the week at about 675. Now, Info Edge is one of India's largest e-commerce online classified companies. And to give you a bit of context, 99 Acres, Naukri.com, Jeevansati.com, these are the websites that it owns. It's also invested in Zomato.com and PolicyBazaar.com. Paras, tell us why the company makes your list.
I think it's probably the only play on the improvement in the employment scenario in the country. If we are talking about a recovery in our economy thanks to the change in the government, which means that it is possible that we might see an improvement in the overall employment scenario. And despite the fact that the economy was kind of just chugging along in the last 3 to 4 years, the company has been growing at a clip of more than 20%, year on year for the last 3 to 4 years. It has a balance sheet which is very robust, and a large part of its revenue comes in from Naukri.com, and almost the whole of its profits also comes in from Naukri.com. So the company has been gradually kind of putting in its more and more of its liquid cash to use into various websites like matrimony. You have this 99acres.com and PolicyBazaar.com and MeritNation.com. All of these guys. So eventually these guys will start paying off as they gain scale. For example, 99acres.com has already gained scale and is kind of breaking even, and that is the case with other guys as well. And despite all these investments, the company is still sitting on a cash of about 400 crores, which makes it very liquid. Going forward, I expect the company to kind of keep on growing at 25 to 30%, assuming a moderately improved scenario. And if the scenario improves further, then the growth rates could even accelerate. The stock is not very cheap in terms of P ratios, but I'm not factoring in any further re-rating in the P ratios. I'm just factoring in the kind of earnings growth that could come in. So over the next 2 to 3 years, I would see a compounding of close to 30% in the company, and therefore the stock is looking very attractive at the current levels.
All right, now I want to move on to Gaurang's recommendation. We're talking about Tech Mahindra. Now, obviously, Gaurang, when we spoke a little earlier about the IT sector, there is a large view across the market right now. I think IT is out of favor. Why would you put your money there? You'd be able to get far more growth from the companies that are in favor right now. Why Tech Mahindra at this point?
Yeah, I think a lot of people thought Suzlon will not move. A lot of people thought Unitech will not move, but they've been flying around, but that apart. Well, I do feel that short-term negativities are opportunity to buy, and you did ask me a question a while back that when the stock's correct, is it a time to buy? When the sectors go out of flavor, is it a time to buy? I think that's the perfect opportunity to buy, notwithstanding what happens to the sector or stock in the short to medium term. If you have a long-term time horizon, year plus, I think definitely companies like Tech Mahindra, which have the capability of becoming tomorrow's large cap boys. So I do believe that post the merger of Mahindra Satyam with Tech Mahindra, the entity which has turned up has got strong growth visibility, has got tremendous amount of product mix which can augur well over a period of time, and the geographical reach looks quite excellent. So I keep all these things in mind and the earning visibility going forward. Not to forget the kind of numbers that the company gave about, I think about fortnight back, were quite a stellar set of numbers. And not again over here, this is one particular stock. If you see it correcting, you will also see visible buying coming in, and that's delivery based buying. So somebody smart money is moving in from a longer term period. A conservative target of a year plus is about 2200, and we might revisit these targets upward in the next couple of quarters if the expectation is above.
It's time now for my favorite part of the show, and that's the report cards. Let's take a look at Paras's report card first. Paras recommended Gabriel India when it was trading at 27 rupees. It's at 42 right now. He recommended NBCC when it was trading at 151. That's at 300 rupees right now. He also recommended Maruti Suzuki at 1240. It's at 2385. And Axis Bank at 1110. It's at 1864. Well, Paras, looking at these recommendations, thank you first of all for the recommendations. Axis and Maruti Suzuki, what's your call right now? What should we be doing with these stocks?
I think just enjoy the ride. I think the ride has just started, and if we are turning positive on the economy, there is no reason to be negative on these stocks. Axis Bank has a significant part of its loan book coming in from industrial lending, and which was supposed to be a bugbear during the slowdown days. Now, if the economy turns around, these as the portfolio which will really give it the delta. So Axis Bank, my sense is not only will you enjoy earnings growth, but also a re-rating from the current levels. As far as Maruti is concerned, lesser said the better. And despite all the kind of controversies that the company has gone through, the investors have lapped up the stock. I think as more and more money flows into the pockets of investors due to the recovery in the economy, it's Maruti which is going to really benefit among several other consumer companies. So I see growth rates improving, and consequently even the P ratio is improving. So both of them continue to be good investment bets even at the current level.
All right, so hold on to those stocks. Let's look at Gaurang's report card. DCB you recommended at 45 rupees. It ended the week close to 75 rupees. You also have Axis Bank on your list of recommendations, which you brought to us when it was trading at 1,119. You recommended Infosys, Tata Motors, Bharti Airtel, Petronet LNG. Hasn't turned around. What's your expectation on that stock?
Well, I think it is time. It will definitely turn around, and given the kind of issues that the company is able to resolve as far as the southern facility is concerned, the new investment in terms of the hedge facility is also going to augur well. And visibility in terms of earnings will come from the new government's ability to possibly reach those alternative fuels which are only restricted to maybe tier 2, tier 1 kind of cities, only metros. You go out to the highways, expressways, you don't have those availabilities. So my understanding this, given over a period of time, it is like sitting like an elephant, but I know the stock will definitely move over a period of time. and it is only getting right strategies in place. So my understanding is that the stock has not moved, it has not gone down either. You can look, the glass is half full or half empty. So my view is that the glass is half full.
The other glass that's half full is Power Grid, which you recommended to us at 120. It's currently at 130. It's missed the target you gave it, but we keep circling this power sector. What should we do with that stock?
Well, I don't blame you for that, because it's Mr. Modi to be blamed with the kind of positivities that people have shown in the power sector. But again, fair, let's face it that the deficit that this country faces in terms of power is huge, it's humongous. It's not going to be answered in 3-6 months, 1 year time frame. But it is a monopoly company. I mean, it has the transmission network, it has grid working. And if you have to have increased capacities in place, you need to transform those power to the end consumer. And that's where Power Grid will definitely pay off over a period of time.
All right, we're going to have to take a very quick break. But when we come back, we're going to answer more questions. We'll talk about stocks like Lupin and LIC Housing Finance. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Both Gaurang Shah and Paras Edenwala are still with us. We're answering some of the questions you sent in during the week. Anand Kamble has written in 250 shares of Lupin, bought at 12.24. Should he hold on to that stock? He also wants to buy either Axis Bank, ICICI Bank or IndusInd Bank at current levels. Which one should he buy? Paras, we had a conversation about PSU banks. What's your call on the private banks right now? Between ICICI, Axis and IndusInd, which one would you recommend he buys at these levels?
That's a tough call. All of them are looking very good. The growth rates will kind of only accelerate from the current levels. But if I have to really pick one, then my vote would certainly go in for ICICI Bank, just because the valuations are cheaper among all the three of them. So I think it's ICICI Bank.
All right, ICICI Bank. What about Lupin? 12.24. He bought it at.
Well, the issue is the domestic business. The numbers as far as the company delivered last time around, last quarter, that is, were looking quite good according to us. And we also heard the management commentary wherein they are going to try their best efforts to turn around the domestic business. And again, because of high risk appetite coming back, where you've seen IT and Pharma consolidate and correct. I would say that if he's bought it at higher levels, I don't see any reason why I shouldn't advise him to average it out more in case if he's got the money. And if he's got 1 year plus time horizon, as a disclosure, we do have a target of about 1250 to 1300. But then he would just be making profits or, breaking even or making a little bit of profit. So if he's got investable amount, I think it is at sub 1000 levels, if I'm not mistaken, Lupin. It's a perfect opportunity to buy more around.
All right, I have time for just one last question on the show. Rekha Menon has written in. It's always nice to hear from a woman investor. She has 200 shares of LIC Housing Finance, which she bought at 180 rupees. Should she hold on to that stock? Paras, LIC Housing Finance?
The right kind of business, valuations being cheap, growth rates being good, and a reasonable amount of promoters, reasonable quality of promoters. I think there's no question. I think it's a good buy for the long term.
I want to very quickly ask you about all of the NBFCs. There was a slightly far-fetched theory that if infrastructure improves, commercial vehicles will be back in demand. And so then lending companies that lend for commercial vehicles like Mahindra Finance will also be in demand. Is that a view that you buy into? Where do you see value in NBFCs?
Well, I think there is deep value, but only problem is this revival of this entire commercial vehicle sector, logistic business, etc. are the largest customers for these particular vehicles. So my guess is that M&M Finance is one of the stock which looks quite attractive. Post the numbers, the stock corrected, has been consolidating for a very long time. And I remember giving Shriram Transport Finance once upon a time in our earlier conversation. That stock has hit the target and gone beyond that. So I think it's possibly right time, but you need to have a little bit of longest time horizon for the revival to take place. So M&M would be the best bet, I guess.
All right, M&M is the best bet. Unfortunately, we've run out of time. Gaurang, thank you so much for coming into the studio and spending time with us. Paras, it's always a pleasure to chat with you. Thank you so much for joining us on the show. Remember, if you have questions for either Gaurang or Paras, write to us. Email ID is at the bottom of your screen. You can reach me personally on Twitter. Happy investing and thanks for watching.